Chairman, thank you, Mr. Stumpf. Good morning.
Good morning.
As I understand the circumstances, the factual circumstances, many of the problems, while they were system-wide, many of the problems were focused in the Los Angeles area within your banking system. Is that true?
It's true that that's the largest part of our business, but they were also focused there, yes.
And have you analyzed sufficiently to determine what was different about Los Angeles than places elsewhere in your banking system that would suggest that the number of times, the volume of fraudulent acts that occurred there, how do you explain that?
Well, as Senator Heitkamp said, and if I did not share this, I want to make sure, I also agree, 5,000 people just don't do 5,000 random things all on their own. I'm sure there were people talking to one another within a branch and so forth, but that analytical work is being done and has been done. I don't happen to have it here. I'll have our team work with your staff to make sure that you have whatever you need on that.
I would welcome that. I'm interested in knowing if you see this as a customer issue, a more vulnerable population of banking customers, or as the word culture has been used here a number of times, was there something different about Los Angeles, which I assume, again, I think illegal behavior, immoral behavior, breaking the rules is wrong wherever it happens, but our goal in management, your management of a financial institution, is to diminish the chances of that happening. So you never condone bad behavior, but we want to make certain that the circumstances in which it is discouraged and never encouraged, and I don't have a feel for that circumstance. I don't know what really is the facts within the banking leadership that may have encouraged this behavior. We've seen this before. I serve and have, with a number of my colleagues, including Senator Brown, on the Veterans Committee, where we saw the consequences of a system that rewarded appointments for veterans who needed medical care.
Correct.
We saw a scandal across the country in which veterans were put on a list suggesting they had an appointment. They didn't. In the circumstances in which those individuals were listed as having an appointment, the allegation certainly exists that there was death as a result of the failure of a VA system to provide necessary health care.
Correct.
I think a point that Senator Heitkamp make, I would make to you again. There's a number of us on this committee and in Congress who work to try to find the right regulatory balance for financial institutions. Mm-hmm. And just to stress with you the importance of then having our financial institutions behave, their behavior, conduct be a certain level. Otherwise, it undermines the efforts for that attempt to change the regulatory environment for financial success. And we particularly focus that on community banks, but we care about those financial institutions that have a relationship with their customers. And one of the arguments that has been made is those relationship bankers can rely upon the relationship. And what we're hearing from the circumstance that we find at Wells Fargo is that relationship was taken advantage of. It didn't accrue to the benefit of the customer.
And Senator, you are right for that portion. And what hurts so much is that we spend so much time trying to do the right thing, and when a customer gets a product that's not used or not benefiting them, that hurts them and it hurts us. We have no interest. And if I could just take 1 second, I want to correct, Mr. Chairman, or share something that I wasn't as clear on. On deposit account fees, none of those were reported to credit bureaus. So the credit bureau impact relates exclusively to credit cards, and we're gonna run each one of those down. Thank you.
Mr. Stumpf, let me ask a final question. So I don't think you've provided us with a precise time frame in which regulators were notified, but I'd be interested in knowing what regulators were notified, when, who, and what steps they then took as regulators in response to the information they had.
Okay, and again, my recollection is that our prudential regulator, the OCC, was involved and notified and active in the 2013 timeframe. At about the time of the lawsuit from the City of Los Angeles, we informed the CFPB. And so I can tell you what we did. And I know you have a panel later with them, but that's what my
None of these actions at Wells Fargo came to light as a result of the regulators finding that behavior. It was reported to them subsequent. Is that true?
You know, I want to be, I don't want to speak for them, and I don't know what part of this is confidential supervisory information, but my recollection of what we did was deal with this issue, terminate people, inform our prudential regulator, and after the City of LA, inform the CFPB.
Finally, I would say that my experience in dealing with the Department of Veterans Affairs in their circumstance, in way too many instances, in my view, the employees became the scapegoat for what I saw as actions or encouragement behavior by their supervisors. And I would encourage in your circumstance to make certain that the employees are not the scapegoat for behavior at higher levels.
I think that's a great point, Senator, and I am, you know, the 268,000 that come to work every day of our team members, they're the most fabulous people, you know, and I just love them and what they do. But the 5,300, for whatever reason, they were dishonest, and I'm not scapegoating, but that is not part of our culture. And some of those jobs, many of those jobs, most of them, were very good American jobs.
Thank you, Chairman.